Welcome to the New York State Association of School Business Officials webinar. Today's program is the New York ASBO Monthly Planner, October edition. Your host for today is Donna Clement, Director of Professional Development. Operator assistance is available at any time during this conference by pressing #. Following the presentation, you will be invited to a live question and answer session. You may send chat questions at any time during the presentation using the chat window indicated by the speech bubble icon located to the right of the presentation. Please address chat questions to the Q&A group using the drop-down list located at the bottom of the chat window. Without further ado, I would like to return the call over to our host. Donna, please begin.
Okay, thank you, Michelle, and welcome everyone to our monthly planner series. And we are going to be talking about cash flow analysis and making sure that your information is accurate. And our presenters today are Maura Carlson and Sonia Russweiler. Doreen Rowe was going to participate, but she was unable to. She got called to another meeting. So, but we have the hands-on people with us today, and we're really glad and thank them for offering to present. And Maura, it's up to you.
Good afternoon, everyone. Well, I want to thank New York State ASBO for giving us the opportunity to present on cash flow analysis. I am Maura Carlson, Administrator and Central Business Office Manager at BOCES here in Norwich, New York. Also joined by Sonia Russweiler, Treasurer for the Educational Finance Office here. As but Doreen has prepared the PowerPoint that you see of the Excel spreadsheet you may use as a template for tracking your cash flow. In this presentation, we will be using the word district to mean a school district or a BOCES. One that shows how changes in the balance sheet and income affect cash. And financial activities.
Maura, this is the operator. I believe you might be cutting in and out of as you're speaking. I'm not sure if that's intentional.
No. Okay now?
Yes, that's good.
In particular, its ability to pay bills. Over a period of time. It also helps demonstrate the amount, timing, and probability of future cash flows. It has the funds they need to meet payroll, accounts payable, and loan obligations. It helps the district ensure that it does not incur a liability in excess of the amount appropriated in the budget. Also important, fund balance, allowing the person in charge of finances to have real-time knowledge of what the cash situation is at any given time. Can everyone hear me now?
Yes.
Okay.
Okay. And you want to move the slide?
Yes. I'm just looking for my spot.
Okay.
For budgeting purposes, it will provide historical data to use as you develop your budget and a way to control expenditures throughout the fiscal year. Today's presentation is an overview of the why and how of maintaining a cash flow sheet and is meant to be a starting point for those who are beginning or revamping how they manage cash flow. Let's get started. The uses of cash flow analysis primarily are to monitor your cash balances and bear in mind as we go through this presentation, try and focus on setting things up for the general fund first. Later on, once you've gotten accustomed to how the cash flow works and you're used to using it on an ongoing basis, you can add other funds to it. It will help you manage your money effectively. If you know you have payments that you need to make, you can try to structure them so that they're quarterly versus monthly. And that helps to balance out the ins and outs and eliminate additional borrowing needs. Cash flow is also used to identify and plan for potential budget difficulties and avoid revenue shortfalls. It maximizes your investments for improving interest income, and it enhances your credit rating, thereby reducing the cost of borrowing if needed. For instance, when you go out for borrowing, the more cash flow detail you have, the better projection the finance institution will have, and that may enhance your rates. It provides them greater clarity by splitting out the fringe and the payroll. You need to analyze what your district needs to gain from a cash flow analysis. The day-to-day cash monitoring is easier to do for us as the BOCES. We do that as we do our cash receipts. We go right in and record that on our cash flow spreadsheet. Others may want to do it once a week when they get their bank or lockbox statements and update it then. You can also use it for investment planning and identify potential borrowing needs. It can help with projecting your fund balance. As you project your fund balance, it helps you to know what you're going to need to set up for your reserve funds and prior to calculation of your tax levy. I just wanted to mention a classic definition of fund balance is the prior year's fund balance plus the revenues minus the expenditures. I have more detail on the fund balance, and if we have time at the end, I can go into that for you. Each district needs to determine their cash flow analysis period. Some ways it is determined is project-based in order to provide you a status on your capital project or grant and to help determine cash needs through the time period of the project. It can be done daily to help determine your daily balances for collateral, transfers, and disbursements. Or you could do it weekly, as I mentioned earlier, to cover payrolls, bill schedules, and plan for your weekly investments. For BOCES that do cooperative investments like we do at our BOCES at DCMO, we need to really plan ahead, knowing what our investment states are in the future, and be aware of what we can go ahead and move forward. You could plan it, just do a cash flow analysis and add the information monthly. And this would be useful for planning investments up to 30 days or more in order to monitor the accuracy of an annual forecast. Or you can use it for annual projections for TANs, RANs, or BANs. A TAN is a tax anticipation note prior to when your taxes actually hit the account. RAN is revenue anticipation note, often used in the summer to cover payrolls before the taxes come in, or in the case of a BOCES, before you begin billing for the fiscal year. And a BAN is a bond anticipation note, generally used for capital projects and long-term borrowing. When you develop your cash flow, you need to look at the needs that you have for your district. Consider what your board would like. Get input from them about what they're looking for. And your superintendent, his or her need to stay on top of the district finances so that they can answer in a knowledgeable way when asked questions about the financial state of the district. Your auditor, here at DCMO in March, we send our preliminary cash flow sheet in March to our auditor. so that he can see the totals and make sure that we have what we need to get through the end of the year and anticipate any expenditures. Your financial advisor, they would like to see more detail because as they go out and put the notes out for the district, for the RANs or the TANs, they have as much information and detail as they need to help you get the best rate for your district. Banks and financial institutions, if you're borrowing very short term, may be looking at your cash flow statements as part of the data they need to know what they can give you to borrow. But the most important thing is it has to be what you and your treasurer need. You're the ones that are on the day-to-day front line of monitoring the finances for the district, and you have to be comfortable with the information you need at any point in time to know where you stand financially. Every district is different, and as such, a cash flow statement should be set up to meet your specific needs. One important suggestion, please don't try to overdo it and get too complicated. It's good to remember the KISS concept. Keep it short and simple. Don't get so many categories and details that you don't get started or implementation is too daunting. If you keep it short and simple, you will be more likely to follow through on it in a long-term basis. If it's too complicated, it's easy to say, wow, this is just too much work, and you don't continue using it, and then you've lost the validity of the tool. Then as you become more familiar with how you're running the cash flow, and this ties back to starting off with just the general fund, you can add more details later on. Adjust it and improve it as you go forward to meet your needs as time changes. Use a simple program. We use the Excel sheet. We prefer that mainly because our staff is able to enter it and it's easy to adjust. We did have an Excel sheet attached as part of your materials, and it is a template that you'd be welcome to use, as I mentioned earlier. When you're first starting, a good idea is to have just one person manage it until they can master it and understand how it works. That way, later on, they can train someone else to be a backup person and work the cash flow statement going forward. To start out, you need to gather what information you need to set up your cash flow. That way, you would be able to look at all the different variables that you would need to include in your cash flow. The Treasurer's Office has this information most often. Two things that you would look at first would be your state aid payments. When the state aid payments are going to be coming in so that you know that revenue is coming in on a certain date, and that you can anticipate having that money and knowing what expenditures you need at that time. It helps you adjust how your cash is flowing out. The other information you need right away is the accounting records, such as your receipts, disbursements, payrolls, and treasurer reports. Later on, though, as I said, you can add other things for projection purposes. Those things are things such as the bank statements from previous fiscal years to help you identify historical trends, your current budget, to use your current budget for projecting next year's budget. As all of you know, we're about to go into the budget season. It seems that one season runs into the next, but we're anticipating we've got budget reviews and discussions about next year's budget already coming up in November, already scheduled. So you can use these cash flow statements to have a historical view on how you did last year, the current year, and what you need to think about in the upcoming years. Your investment schedule, historical data, and future maturity dates. Everyone has different investments that they're making. You want to know when those investments are coming due and know what kind of interest that you might have coming in as extra revenue. Of course, this past year it's been tough. The rates have not been good. We will, hopefully this year will be better, and we'll be able to depend on those higher interest rates going forward. And also any schedules that you may have for leases, rents, bonds, etc. All these things can be added on later as you get more familiar with the cash flow process. It will allow you to have more detail and ability to make changes incrementally. Next, you need to determine your categories for your receipts and disbursements. You will need to determine the level of detail you need to meet your needs. Remember to keep it simple and start broad. You can always break out more categories later on. Utilize these categories that you currently track and look ahead at what you will need later on in the year for borrowing, budgeting, investing, and so on. Receipt or revenue categories to consider. Of course, the school tax receipts, or for BOCES, the AS7 receipts. We look at these revenues regularly, and we need to have a ongoing knowledge of what, in the case of BOCES, services are being requested and provided, so that we have a good knowledge of what our current revenue is. For districts, you have your tax levy, and so that's a pretty consistent amount. It's not something that would really change that much. You need to look at your revenue from state aid. You may want to track it by a category, such as the general aid, the lottery, excess costs, and Medicaid. The BOCES aid and other aids that come in through the state. The STAR revenues that come in from the counties. It's been something that has been looked at hard and discussed in many different directions over the last couple of years. But you need to know what to expect from that, what revenue would be coming in from the STAR from the counties. You need to anticipate the revenue that you're earning from the interest, as I mentioned earlier. I'm thinking next year the interest earnings are going to be great, but I'm a positive thinker, and we can all hope for the best. Also, you have to consider the taxes from the county for delinquent taxes paid. If citizens or businesses have not paid their taxes, as you know, it goes to the county with penalties, and they will bill back on the county bill. You need to know what is not coming in and what to anticipate when those taxes are paid. As we were speaking about this, Sonia and I were thinking that with the current economic situation, that could be a significant amount of money. How much deferment there is going to be, deferment or a default there will be on taxes that will later come in the year from the county. So it's just something to keep in mind, something to track as you do your cash flow sheet. The pilot revenues. These are payments in lieu of taxes. As many of you know, a pilot is something that's negotiated over a period of time. So a company, for instance, may not want to pay the current annual tax rate, but may agree to pay a certain amount over a certain number of years in lieu of taxes. So that's the pilot payment in lieu of taxes. Also, facility use. What revenues do you have coming in from different constituents, such as the Boy Scouts or others that may be using your facility? These fees will be coming in and are part of your revenue and your cash flow. Another item would be tuition payments from non-resident or foster care. These are other revenues that can be included in the cash flow also. There are other receipt categories to consider. The receipts that you receive from the revenue anticipation notes, the tax anticipation notes, and the bond anticipation notes. The rental or lease income. If you're renting out part of maybe some of your rooms to BOCES, for instance, we may rent a classroom at a district level. That's income that would be coming in. Receipts for federal grants to be transferred to a special fund. The federal grants receipts that come in, you need to anticipate what they will be and whether or not you're receiving the full amount of the anticipated from the grant. Sometimes it is you're anticipating or put a budget out for a federal grant, but you don't necessarily receive that total amount. So it's good to track those receipts from the federal grants to be sure that you have what you anticipated. And if not, adjust the budget. Transfers from other funds. It's self-explanatory. Also, do you need to track your interest earnings from CDs separately from an MMDA account? And miscellaneous receipts for all the small one-time items. Anything you didn't make a category for. This would vary district to district and could be one-time payments, regular items that come up one time, such as an insurance recovery. For disbursements or expenses, the categories we want to consider including on a cash flow statement are the payroll, of course, number one, is the largest disbursement that a district makes. The payroll would include the FICA and Medicare, and the health and dental premiums, any other withholdings, the New York State TRS and ERS retirement programs. All of these things are part of the payroll and have a significant impact on your disbursements. Debt service payments, paying your principal and interest back on the revenue that you have borrowed. Warrants, that would be your day-to-day expenditures for supplies and equipment or contractual items. It also would be warrants that would be, if you were tracking on a separate spreadsheet, the capital expenditures over the course of a project. Those warrants are very important to keep track of to make sure that if, say, you have a $20 million project, that you're staying in line with what you anticipated spending during that period of time that the project is being worked. And then there are other miscellaneous items that are dispersed, unanticipated things that come up. You'd want to make sure that you have a category to put that into. And additional disbursements would be, do you want or need more detail from the warrant? One way to track that would be to use your object codes. It would show you utilities as listed being separate, or contractual obligations separated out, rental and leases separated. We especially look at the rental and leases separation and the utilities at this point, especially with the utilities being so volatile. There's been a lot of changeability, generally upward, in expenditures. So we have been tracking very carefully the utilities that we're using in our different buildings. Remember through all of this to use the KISS. Keep it simple. More categories can be added on later. We've gone into a little bit more detail of things you can put in that don't necessarily have to be in. Next, you would get to the point of designing your template. We did provide the Excel sheet, as I mentioned, that Doreen had created for you to use. An Excel template will allow you, as we said, greater ability to have other people adding information over time. They can either be trained to do it or they can learn to do the input in the absence of the person who's the primary cash flow person, generally the treasurer. As I said, this Excel sheet is included in this webinar, and we've brought up some pages with a little bit more detail. I'm going to turn this over now to Sonia Rothweiler, my treasurer here at DCMO BOCES, and she'll go through the Excel spreadsheet with you.
Hello. I just wanted to mention when you see this first slide here, just some general things that we use. It's easier for me to explain because I use this on a daily basis. So across the top, you'll see that we do it daily. So you'll have every date for each day of the month, including Saturday and Sunday, which is just, we're just accounting for every day. And then along the side, down the side of it, that's our categories that we've chosen as, how we want to track things. And across the bottom, you'll see that we have a separate tab for each month because that's how we track it. Once we close out a month and we reconcile, then we move to the next one to make sure the numbers, match our accounting software. So if you go down the side, you'll see what categories we've chosen. Some of them may work for you, and some of them may not. But the most important thing here is that you get everything on there that you need to look for. You might want to do this differently. You might want to have only a few columns across the top that go weekly. That's up to you, but this is how we do it, and you can use this template to, modify as you go along. The one thing I did want to mention, though, as you modify this, and I think we have a little disclaimer at the end saying that, you have to make sure on your own end, if you make any changes, that the numbers are still tallying at the bottom. We have all of our formulas in there, but if you add across the tabs on the bottom, say if in September I have a new revenue that I say, I want to start tracking this new revenue I have. If I add a column or a row in September, in order for it to pull forward, and you can't see it on this slide, but on the next, I think a few later you'll see it, we have a tab for projections, and that's where we'll either project for the rest of the year, and then we have another tab where we project for the following year. If we add a row in September, we need to add a row in October, November, and so forth, so that every number pulls over correctly into that final tab. But again, as you're adding things, make sure your numbers are pulling to the bottom. If you add a row, make sure that number is coming forward, just until you get it set up. When I first came 2 years ago, it was, you need to get used to it. Once you get used to it, things will fall into place. The categories down on the side for receipts, we have the AS7 payments, which for a district might be your school taxes. Miscellaneous revenues. For us, that might be a FOIL request that comes in. It might be, we offer a UPS service here for our employees that we get reimbursed for. Things of that nature. Our state aid is the money that we receive from the state that we then distribute to our districts. We have the CDs, which is what's maturing for that week. And then we split out our interest on CDs. That's something our board has requested, and it's kind of neat to see how much money that we're making on our CDs. And we have our RANs, because we typically will go out for a RAN on a yearly basis. And then bottom line, you'll see transfer from other funds, and that's set up for us because this spreadsheet has been in place for us probably 10, 12 years. So we have all of our, well, not all, but probably 4 or 5 funds set up on this cash flow. And so when we transfer money to federal or do a loan to school lunch, and, when they pay us back, that's to use to track that back and forth. And on the bottom where you see disbursements, we split this out. You can see payroll 1, 2, and 3. That's for each payroll of the month. And we added, when we first started, it was all under just payroll, and then we just brought it across. But then it was hard to determine once we got to our projection year, which months had 3 payrolls, which months only had 2 payrolls. So that's when we started to break it down, and the same thing for the bill schedules. Towards the end in June, we have more than 3 or 4 bill schedules because it seems mid-month we have to get something paid by June 30th. So we break it down like that. Same for the FICA and Medicare. The 3. We have the 3 listed to go along with the payrolls. And then you'll see a line where we have for the dental and health insurance. We do a wire every week. So it's kind of a reminder to us that, hey, you need money. You're going to be sending out this much money for, at the end of next week. Helps us to plan for our investments, things of that nature. The rentals, of course, we rent classrooms from our districts and other entities in the community. The next line for CDs, that's what we invest for that week or that day. We do it on a weekly basis. Capital transfers, that's anything that we have transferred to a capital project. So it might be, the reserve that we had set up, we're using general fund monies for a capital project. Again, the transfer to the other funds, but we have other funds set up on this flow. And I mean, it might be if you're starting with general, you could still set this up even though you don't have spreadsheets for the other funds, because you'll still be loaning money to other funds and receiving it back when they pay it back. There are RANs. When we pay our RANs, we have that listed on there. And we have our TRS payments on here because for us that's a big one, and we want to know when it's coming. Our state aid that we need to distribute, basically ours is an in and out type situation, but I believe for some BOCES it's not. So they need to plan, and a lot of times they want to plan, say we're getting state in here, but our investment that we need to cover all of it isn't coming due until the following week. So to make sure we have enough cash flow, we're going to hold off on distributing it for a week, and then we put in there our surplus when that's distributed. So those are just our categories that we track. And let me see if I can get this. Okay. On the next slide, it's just showing you some of the things that we typically use, some different ways we do to help us identify different things that are out of the ordinary. When we're estimating payroll, or we know we have a weekly health payment, but what that is it's our claims. So we don't know ahead of time if 40 people have gone to the doctor and are claiming, or if 150 people. So we kind of estimate that. And for the most part, it is constant, pretty, close to the same number. But we know also that in July and August, when all the teachers are out, that number tends to double. So it's just things that you're going to be looking at, and you as treasurer, whoever is responsible for, needs to be looking forward and saying, okay, what's the historical number for this? It's your best guesstimate. But all of those things we highlight in yellow. So we know a payroll's coming up next week. We know about what the payroll's going to be. We put it in yellow. Some of the bill schedules get a little bit tricky, but I know, like for us, our bill schedules vary. We know September's a heavy time. We know June and July is a heavy time. For the most part, if we know we have, let's say, like for us on the BOCES end, we have bigger payments that we know are due, in August, or maybe in December we make another lump sum payment to one of our cross contract BOCES. We will add that in there as an estimate so that we know, every January we know we make this added payment of $600,000. So we want to plan for it. Any estimates we put in yellow. We also, if it's something that's not of the ordinary, we add a comment in there because, 3 days later when somebody else here, we have two people entering most often. So if she's entering something and I come to look at it and I say, why do you have the bill schedule so high this month or, this week? She's got a comment in there telling me, well, we have to pay, this other BOCES for, our services this week. And say, oh, okay. Or she's got payroll in there twice, and, well, we have to pay, the retro for the contracts passing, or, things like that we know, we might not, it's not a constant, so we want to identify those. The other thing you can do is to highlight your holidays. So as you're going across looking at this, if just in a quick glance that day is a holiday and there won't be any entries on there, or to plan ahead for holiday, that typically we have payroll on Friday, but Friday's a holiday, so that payroll's going to be, you need that cash flow on Thursday. Just a couple of different things that we use. Okay. On this one, I mentioned it previously. This is where it's going to show you those other tabs at the bottom for the, it's the current year projection, and then it's the future year projection. And the current year projection we do in March. And we do that one for our auditors and for our financial advisors. Our auditors like to take a look at it and see, where we're headed, what surplus we plan on, what payments we have going out, just for him to kind of do his preliminary. The financial advisors look at it because, like I said, we typically will go out for a RAN, and they like to see, we have to project the last 3 months of the current year we're in order to give him, an accurate projection of the next year. So that's why we have those two at the bottom. And it just kind of helps us develop the following year cash flow if we have the projection for the rest of the current year. And as a side note to that, when we estimate the rest of the current year, you'll see like in those columns, we go from all of the actual numbers right up through November. And then you'll see in December that everything ends in 0. That's where we start estimating, and saying, okay, this is the typical. This is where you really need to dig back into your historical data and know when you're collecting more from districts or when you're paying out more, when your payroll increases, when your health insurance increases. This is where your historical data will come in. And again, after developing this and using it for a couple of months, you'll have a better handle on, what types of historical data is. And if you've never done the cash flow before, the analysis, then it'll probably take you a full year before you can feel comfortable with that historical data, because now you'll have it right in front of you on this cash flow. So then from here, from your fiscal year projection, the current one that you're in, then you're going to want to go forward to your annual projection for the following year. Now, when we do this, we take our current year projection and we copy it into the future year projection as text. And the reason we do that is so that we can manipulate it without changing anything. So we bring forward all those numbers, and then we can say, we all have to tweak numbers here and there to make it more realistic. So if we copy it over as text, then we can start saying, well, we know in the new year we're going to, spend another $400,000 to repair this roof. We have to repair it. It's not pulling forward from your historical data from the current fiscal year, but it's an additional expenditure that you'll have. And at that point, it's not a formula. You don't want it to be a formula, because when you go in to manipulate it, you just want it to be a hard number. So that's why when we go to do the future projection, we copy it over as text. And I believe that is all that I have on that. And if there's any questions, but again, we encourage you guys to check your formulas after you've entered any data to make sure that your sums at the bottom are pulling forward correctly, to make sure the balance carrying forward from month to month is correct, and any other formulas that are in there are correct. I will turn it back over to Maura.
I wanted to touch base a little bit more in depth about using the cash flow as a strategic planning tool for budget development and budget administration. Every district has a strategic plan that they have, and a mission and vision statement for long-term goals and objectives. And this tool as a cash flow statement helps us to accomplish and have a means to meet those goals and objectives. It will help us develop where we're going as a district going forward. And as such, it will look at areas such as your funding priorities. When you're doing your long-term projections or long-term planning, you are interested in identifying those projects that would be fiscally possible for your district. Having historical cash flow data enables you to look and see what your regular expenditures are, see what your fund balances were in prior years, and determine where you want to be and set those goals. And as such, it also helps you maintain your reserves and fund balance. Those monies that are set aside for specific projects or with specific projects in mind. Using the cash flow statements, you're able to know in advance what you need, and also see what you've saved from the prior year that should be spent in the current year as you bring it forward in the fund balance. It helps you to look at your short and long-term debt, as I said earlier. knowledge of when these principals and interests are needing to be paid is crucial to being able to make those payments on time. Especially if it's a grant or a band, these are generally large amounts of money. And also, it helps you to see and determine what type of fixed assets that you would like to have for your departments, whether it be furniture or the new smart boards that you'd like to have in many of the classrooms are getting now. These goals for upgrading technology and providing additional equipment of any kind, it is something that you're able to bring forward in a cash flow statement and plan ahead as you develop your budget. Using all the historical data, which includes, of course, your fringe benefits, debt service, utilities, and service contracts. At the beginning of the year, as Sonia said, you're taking your historical data from the prior year and plugging it in, knowing based on historical data from the prior year what you can expect for expenditures and revenues in the months up ahead, in the fiscal year ahead. So you're plugging in numbers that aren't hard numbers, but they're estimates, hypothesis based on fact that will help you plan ahead for the year. And, of course, they will need to be changed as time goes forward. But by encumbering the funds that you know that you're going to need to expend, it helps tighten that cash flow analysis. You know that these things are encumbered, and it gives you a certain amount of comfort zone that the major expenditures are going to be covered, your payroll, your utilities, that type of thing. If you aren't sure whether or not you're going to be expensing all of your revenues towards the end of the year, when you're doing in March, say you're looking at your fund balance, you can determine whether or not those projects or equipment that you had thought of getting would be a good thing to do in the current year. You don't want to have too much money left at the end in your fund balance. So you're able to anticipate through the cash flow what monies you're going to need to the end of the year and what extra monies that you may have on hand that you could use for current year expenditures, supplies, or equipment. The budget status that we all are looking at are the cash flow analysis allows you to look at your budget status on a regular basis and helps the person who's responsible for controlling the finances to have a good idea about what's coming up. And as I said, it's on a real-time basis if you do it frequently. Here at BOCES, we do it on a daily basis as our cash receipts come in. So at any point in time, if an emergency comes up, we can look at that cash flow statement and know exactly where we're standing within reason. None of these things are set in stone. It is a tool, and the tool is only as good as the information you put in. That's why we've reiterated several times that you should be careful about the information that you put in, that you don't make it too complicated at first. But if you can break it down later on and make it a little bit more detailed, that will allow you to see where you need to make cuts or adjustments forward. It helps you with the cash flow statements to look at your revenues at any given point in time. Your revenues, of course, are important. As I said in the BOCES, our revenues vary because of the services purchased. So we will always be looking at our revenue status report and our service contract report whenever we do a budget review on an ongoing basis to be sure that the revenues that we anticipated will be coming in to match our budget. Otherwise, we will adjust our budget accordingly. I wanted to talk a little bit more about fund balance. Are there any questions right now? Okay, I'm going to go ahead and talk to you just a little bit more on fund balance. Give you a brief description of what it was and how fund balances are come up with at a district level. A classic definition of a fund balance is the prior year's fund balance plus the revenues and minus the expenditures. These projections are usually done starting in January to be sure that the budget is not overspent or, again, that it is not too far underspent so that it would have result in a fund balance that's too large. Part of the fund balance is set aside to pay for purchase orders made prior to year end. We call this part of the fund balance reserve for encumbrance fund balance. So these are monies that are already encumbered. We've ordered the product before the year ends, and we know that we have to pay for it when the product arrives and the invoice arrives at the end, after the end of the fiscal year, generally after June 30th. That would be your encumbered fund balance. The rest of the fund balance that you have is the unreserved fund balance. The unreserved fund balance itself is divided into two parts, the appropriated and the unappropriated. The unappropriated fund balance is sometimes called the undesignated fund balance. This is money that is used for unexpected expenses, such as a breakdown in equipment that needs to be repaired right away, like an air conditioner or furnace. And it helps to smooth out the cash flow. The remaining amount of the unreserved fund balance is the appropriated fund balance, and it must be used to keep the tax levy down. This can be seen as a revenue portion of the budget and reduces the amount of money that needs to be collected in school taxes. So knowing that you have to plan ahead on these fund balances, the cash flow sheet is a critical tool, especially as you go further into the year. From March on, I know that at some districts they have spending freezes in April. They're concerned about having enough revenue to cover end-of-year expenditures. And then as you get closer to the end of the year, being selective about the types of things that need to be purchased. So that's just a general overview of the fund balance. I know that it was in the title of today's program. All of the information that we shared with you today will help more accurately anticipate and project the fund balance that will occur at the end of the year. As I said, it's not all set in stone. It's variable and has to be checked frequently and thought through. The numbers that are put into a cash flow projection sheet or a spreadsheet are hard numbers, but still you have to think about what's in there. You have to anticipate things that you know are coming or might be coming. This is the kind of people side or the soft side of cash flow analysis. Being in good contact with your different departments, your transportation, your principals, their needs for the program and the teachers, operations and maintenance, things that they may be thinking may break down or come up as an issue, equipment they may need to buy. If you stay in good communication, it really can help you as the person responsible for managing the finances of the district to anticipate things that may be out there in the fringe, so to speak. It's not really in writing, but unless you're listening, you may not be aware of it, and then suddenly it comes on. I see that there's a question. Speaking of fund balance, I was wondering where other districts came in this year. We were right at 4%. I won't be able to answer that question, but if someone responds to the question, then I will be able to go ahead and read that off to the group. We hope our suggestions and template will help you with your cash flow analysis. Use it as a tool, develop it to meet the needs of your district, and to track your finances going forward. And again, as Sonia mentioned, please check your template for formula accuracy and ensure all the information calculates correctly. Any changes in the template can seriously alter the information that comes back to you on the spreadsheet. So it's important to check for it. And when you look at it for historical analysis data, using it in text at the end of the year to balance out your year for auditing purposes. If you have it in text, the formulas won't run, and you'll have hard numbers to work with. Now I'm going to leave it open for any questions that you may have. Did you have anything else you wanted to add, Sonia?
Okay, Michelle, this is Donna Clement. Michelle, if you could please let the group know how they can ask an audio question. And group, really, we do have a question on the floor. Robert Meza said that he was right at 4%, but he was wondering where others are on their fund balances, and we'd appreciate some discussion on this. And also, of all the things that Sonia and Maura mentioned, are there any that you do differently? If you'd like to share those with the group, we certainly would like to hear them. Michelle, if you could please let people know how they can call in a question.
Thank you, Donna. Ladies and gentlemen, for those of you who would like to comment or ask an audio question, please press the number 7 followed by the pound key on your telephone now, and you'll be placed in the queue in the order received. Again, 7 and the pound key on your telephone will put you in the queue for questions. Or you can continue to send your chat questions via the chat function located on the right-hand side of your web presentation. Thank you.
Okay.
We have an answer to the Robert's question from Annette. Mentions that she's well over the 4% in anticipation of the state budget issues that are coming up. And in many of the districts that we see in the year, pulling back on expenditures, rate of a mid-year cut, and so the fund balance coming in over 4%. If others have that same situation, if they could just ahead and let us know. And Robert said the same thing as I just mentioned, that they were afraid to show more than 4% for fear of taking that fund balance back. You don't want to do it, but it's better to have that revenue, and if it ends up having to be taken back, it's better than being short.
Fund balance certainly is going to be a big issue this year, and with the economic times that we're in and with the governor trying to call the legislature back, certainly is cause to pause and determine how monies are going to use and how to keep them aside so that you can certainly provide the value to the students that they deserve.
Well, as you said, Donna, that's the key. It's wanting to provide the services that the students need to get an excellent education. It sometimes feels, at least from my perspective, that the legislators, as they discuss things, may not always have the students' needs top in their mind. But we, as district administrators working on the finance, we have a fiscal responsibility to make sure that everything runs smoothly, that our buildings are safe and clean, and that we have the supplies and tools necessary to educate our students to the best of our ability.
Okay, Annette did respond, and she said they cut their expenses last year, and this resulted in the extra monies. And they mentioned at the Summer Business Management Workshop that ASBO held in July, you might want to look at your retirement reserve for ERS contributions as well. Some good information at the SBMW, and actually we're having the curriculum meeting this weekend so that we can determine what the program will be for the July SBMW.
Yes, it was anticipated in the news and talked about that the ERS reserve may be going, the ERS payments may be going into double digits. And so I have heard of districts and BOCES that have set aside extra money in that retirement reserve in anticipation of those double digits. It's a way of utilizing fund balance that you may be anticipating being over the 4%. If you talk to your auditor and discuss whether or not or what amount you might be able to put into that ERS reserve, the retirement reserve, to cover those anticipated increases, that's a very good idea. Robert mentioned that he also had set up that retirement reserve. Yes, it's something that, of course you have to do a board resolution before doing that, and at this point it would be too late for this past year. But if you're looking forward and if you haven't done this and you think you may need to look at this in the next year, you want to start discussing with your board and bringing forward as a resolution so that prior to the end of next year you have something already in place where you could put reserve information.
And the reserves are the area that the Comptroller's Office is really looking into. So you want to make sure that any of the reserves that you set up are correct and they're done in a timely fashion. And I know at the SBMW there was quite a bit on reserves that were discussed, and so also with the annual conference.
I understand that the Comptroller's Office is looking very closely at reserve accounts. One thing they are doing is looking at this point in time. I've heard that they are looking at some of the BOCES and considering, depending on what they see, going back and looking at everyone again at the reserve accounts. So I really don't know much more than that, but I have heard that. One thing I did want to mention too is funds that districts are going to be receiving coming up. I do know that State Education Department is going to be doing a webinar on Friday at 9, and that is going to go over the reporting issues having to do with the ERA. But beyond that, and as it relates to our topic today, I have a concern for programs that almost using those ERA funds to fund a program, but they have to always bear in mind that the ERA are only available for a 2-year period. At this point, we have no idea if after 2 years they will still be available to us. So when you're planning your budget and starting new programs or expanding programs, you should always be concerned about that revenue being there after that 2-year period.
And Maura, would you like to share what time is that webinar that the State Education Department is having?
It is from 9 o'clock to 10:30, and I saw it in a couple of different emails. One that came through Questar Planning, they had announced that the SED was going to be doing that. I also saw something come from the SED BOCES contact, and he mentioned the reporting requirements or the things that BOCES need to be aware of for reporting. So we are planning at our BOCES to have myself, Doreen Rao, and our treasurer and principals and senior account clerks attend that. It's the account clerks that are really doing the day-to-day management of the accounting for the central business office side of our office. And we want to be prepared for our districts in case they need any assistance when it does come to doing that reporting. As you know, if you've been keeping up with the ERA information, which is coming, on a daily basis, we seem to get new information about it. The reporting needs to be done in a very rapid time period. The district would need to put the reports into the state within 10 days of the end of the quarter, and then the state has another 10 days, I believe it is. Don't quote me on this, but to get that to the federal government. So there really is no time to delay or have any problems in pulling the information from your accounting software. This is why people have been setting up account codes that earmark those expenditures as being monies for supplementing from the ERA funds. They can pull the reports very quickly and easily and get it out within 10 days to the state.
Certainly is going to be interesting to see how this all works and plays out. It has taken a while for them to give us the guidelines on how to report the information, and I noticed they've also changed their due date a few times. But as long as it can be so that you can get your information correctly, it's all worth the delays. Also on September 30th, we're having a webinar, and it talks about ARRA funds, what is available for construction projects, how do you make a project shovel-ready, and so on. And we have 5 presenters who are doing this program, and the one who started it is Jack Osborne, and he works with David Shaw's group. So if you have information that you are looking for ARRA on construction projects, tune in on September 30th and we will have information for you. Anything else? Any questions, concerns, things that maybe you do differently? Or are there any particular points that Maura and Sonia brought out that you feel could certainly be beneficial to you? We're interested in hearing from you and hearing your concerns. It's 3 o'clock right now. We'll try and stay on the line for a little bit longer to make sure that we answer any of your questions, or you have the opportunity to share information with all of us.
One other thing I just wanted to mention, and taking up on what you just said, Donna, I'm concerned about keeping up with the information, it being off the topic somewhat on the ERA. We've been warned to, stay alert and watch for the breaking news on the different forms and the deadlines and so on that are required for the American recovery. And since we had just gotten the application at the last minute, so to speak, for the deadline for the 14th for the school districts, I believe there's another application coming out for the BOCES, which one of the big reasons I want to be listening to that webinar on Friday is because I haven't heard anything about that, and I have asked the questions whether or not the BOCES needs to be doing anything about this. So we haven't gotten any new information out yet, but I'm keeping my eyes peeled for anything coming through on the email or listservs that would relate to that. So my advice is to just kind of keep an eye out and make sure that you're staying alert and that you don't miss anything, whether or not they're forms or deadlines or new reporting requirements going forward throughout the year.
Well, it doesn't look like we're going to have any further information. I want to thank Maura and Sonia for presenting their information and all their templates and how they make their cash flow work, and thank all of you who are attending the webinar. I encourage you to join us on October 14 for the next monthly webinar series, which is going to talk about tax-sheltered annuities. And we have Greg Diefenbacher from AXA who is going to share information with us. And he's going to specifically focus on checking for excessive contributions. And that always is something that the Comptroller's Office is looking at. Also, on September 22, we have a Benefits Administration webinar, and part of that is going to be on 403B information with Ellie Lauder. And Ellie is an internationally known person on the 403B issue, and I'm sure she'll provide some good information. And I did mention the ARRA construction webinar on September 30. Thank you all for joining us, and enjoy the rest of the week, and look forward to having you attend another webinar.
Thank you very much, Donna, and to all of our speakers. Ladies and gentlemen, this concludes today's New York State ASBO Monthly Planner, the October edition. A survey will appear at the closure of this presentation. Please submit your survey, as your feedback is very much appreciated. Again, thank you all for attending, and have a great day.
The moderator has ended the conference. Goodbye. Thank you for calling.